Hello students, I am Dr. Vinod Kumar Advani from the Department of Commerce, the Bhopal School of Social Sciences. Here we have our third session for the calculation of practical problems of goods and services tax liability. In first two sessions, we already covered input tax credit, all the calculations related with input tax credit, and we already covered the calculation of GST liability on the supply of the goods with exclusion and inclusion. Now today we are starting a new problem with cost of goods sold, profit margins, sales, and the calculation of GST with all these three different topics. Now first of all, we have to calculate cost of goods sold. We have also the profit margin given in the question, that is in term of percentage. After that, we have to calculate the sales with the sum of total of COGS and profits. After that, we have to calculate GST liability, net GST liability of a particular trader. Here we have a practical problem that is related with a particular bicycle producer of Indore. Indore is the city situated in MP. Remember, we are talking about a manufacturer, bicycle manufacturer belongs to Indore, MP. We have the detail of this particular dealer. He purchased raw material from the dealers of Indore. It means it's a intra-state input supply amounting rupees 20,000. Next, we have raw material purchased from Delhi, that is inter-state input supply, because goods moving from Delhi to our city Indore, it is amounting to rupees 25,000. Also we have manufacturing expenses and other expenses. But the main point here, we have the profit margin of this bicycle manufacturer is 25% on the cost of goods sold, or you can say cost. The entire cell is not inter or not intra, it is divided in two parts. Please keep focus on this particular line. 70% output they are selling in Indore, means it is intra-state supply. Intra-state supply goods are moving from Indore to Indore, and next 30%, balance 30%, they are selling to the dealers of Mumbai, means it is inter-state supply, inter-state supply. Why we are classifying inter or intra? I think you all know it is the CGST, SGST and IGST. On intra-state transaction, we have to calculate CGST and SGST, but on interstate transaction, we have to charge IGST. Here we have the rates of CGST and SGST also, both are 9%. So it means total IGST will be 9 plus 9 equal to 18%. Now what is requirement of the question? We have to calculate net GST liability from these particular details, these particular informations. But I think you all know we have to calculate first the cost of goods sold, adding the profit and the sales. Sales is not available at all in the question. First of all, we have to get the amount of sales itself. After that, we can calculate IGST, CGST and SGST. But our first requirement to get the correct value of sales in term of intra and in term of inter also. Here we have the chart, we have the table for the calculation of the same. So let's start with the computation of COGS, profit, and finally the amount of sale. Remember, it is not entire solution, it is the first part of our solution in form of computation of COGS, profit and sale. We have 4 components of cost of this particular bicycle manufacturer. 4 components we have for this particular bicycle manufacturer. First, we have raw material purchased from the dealer of Indore, it is intra-state input. Next, we have raw material we purchased from Delhi, it is interstate input. Next, we have manufacturing expenses and other expenses. Total cost we are paying, it is rupees 80,000. It is cost of goods sold. Cost of goods sold 80,000 rupees. Now what is our profit margin? That is given in the question. We are earning 25% profit on the cost, means 25% on this COGS, means 25% of this 80,000. Here we have this particular profit and the amount will be 20,000. How come 20,000? It is 25% of 80,000. So total sell we are making, this particular bicycle manufacturer is making rupees 1 lakh, but not in a single part, not in a single lot. Out of this 1 lakh total sales, this 1 lakh entire amount of sell we have to divide in two parts. 70% we are selling to the dealers of Indore, it is 70,000, and 30% remaining we are selling to the dealers of other state, that is Mumbai. So it is intra-state supply and inter-state supply. So we have two parts of 1 lakh rupee sell. 70,000 is intra-state sell and 30,000 is inter-state sell, inter-state output supply. Now we can easily calculate the net GST liability because we have clear-cut amount of cells, both intra and inter. Inter-state cell is 30,000 and intra-state cell is 70,000. Let's calculate as the final step of this question. Let's calculate the net GST liability of this particular bicycle manufacturer for the month of March 2022. Here we have the last table, next table for the solution. Now we are going to calculate the net GST liability of this particular dealer of Indore, manufacturer or producer of Indore. First we have to calculate the GST liability, gross GST liability on the cell made by this particular producer. First of all, intra-state cell. The intra-state cell is amounting to rupees 70,000 and we have 9% CGST, 9% SGST, making it 6,300 and 6,300 on intra-state supply, output supply. Interstate supply we have 30,000, on intra-state supply we have C and S, CGST and SGST. On interstate supply we have only IGST. The rate of IGST is not given in the question. Naturally it is CGST plus SGST, means we have to charge 18% IGST on 30,000 rupees, making the amount of rupees 5,400. But remember, please remember, it is figure of gross tax liability, not a net GST liability. CGST payable 6,300, SGST payable 6,300 and IGST payable 5,400. But we are eligible for some input tax credit because we purchase raw material with the payment of GSTs, with the payment of GST. First of all, we are allowing input tax credit on intra-state input supply, that is given in the question. It is 20,000 rupees. The rates are same. So we are eligible to get 1,800 as intra-state input supply credit and 1,800 SGST intra-state input supply credit. Come to the last final step of the question. We are also eligible to get input tax credit on interstate purchase of goods, that is 25,000 and 18% of 25,000 will be 4,500. These are ITCs that we can deduct, we can adjust from the total GST liability, gross GST liability. Here comes the final answer. Total GST, CGST payable is 6,300 and deductible is 1,800. So my net CGST liability is 4,500. Same figure we have related with SGST. It is also 4500. Come to the last column, IGST. Payable amount is 5400 and deductible amount is 4500. Here we have the net IGST liability of rupees 900. It means finally we have to pay CGST 4500, SGST 4500 and IGST 900 to the government. This is the calculation of net GST liability in case of COGS, profit margins and the distribution allocation of the cell. So student, now you are able to calculate the net GST liability in case of COGS, profit margins. In the next session, we will continue the practical problems of GST. Thank you.